Hi everyone, hope you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. Let's dive right in and take a look, see what is going on. If you want to follow me, it's @Finance, and if you want to join our community, finding-value.com, where I dive deeper into all this stuff, looking for potential investment opportunities and sharing all of that with the community. We've got Q&A sessions on the weekends, either Saturday or Sunday. I post those on the website, and I also have midweek updates where I go over individual companies that I see that look good for entries per the technicals. I also look at the fundamentals, and I share that all in the midweek update. We also have a special coupon code that's active if you like to use it. Special is the coupon code. All right, so let's take a look, see what's going on today. We've got copper finally broke out of a tight coil this week. It's not just any metal. It tracks the global economic health in real time. This doesn't suggest fear or risk-off behavior. It signals demand. So here's the break higher for copper, and this is what makes everything kind of difficult in the markets right now. There's a lot of narrative. People talking about specific data. Maybe it's the housing or real estate market. Maybe it's other leading indicators potentially that they're looking at, like sentiment surveys. But here's copper breaking to the upside, which does that negate all of those surveys? Does that mean that the positioning in copper and the smart money is betting that within 12 months or 6 months or 18 months ahead that the market has bottomed and we're about to go higher? Very well could be the case. Everyone who's looking at lagging indicators or potentially the news that's being released, which is all lagging, aren't looking at the right indicators, and maybe copper is that right indicator that's starting to break to the upside. It could also mean that the dollar is about to eat it, because we're seeing a lot of commodities go up that are all priced in dollars. So that could also be another measuring stick, is copper measured in dollars is just another way of saying that the dollar is going down. But it's breaking to the upside. It looks okay at the moment. And maybe some of those recession indicators and surveys aren't 100% spot on. Maybe Dr. Copper's the one that we should be looking at. Eric Yoon says, what happened to the Burger King? And that was the bond king, or self-proclaimed bond king, where you've got declining yields. I remember back in 2021, 22, 23, whatever it is, I was in the camp that yields were going to increase. And that increase of yields was going to cause rotation of money at some point in the future, where yields would get to a certain point, like 4.5%, 5%, and then we would see a rotation of money. People would say, no, the bond king, Stephen Van Meter, I think is his name. And they would point to this guy, and he's like, oh, look, he says that yields are going to go down. And I'm like, that's not any evidence. So you just share opinions, but I don't think that turned out all that well for him. But yeah, what happened to Burger King? It says most people are thinking this right now when they're looking at silver price. A lot of people are saying, hey, we're going to get this big breakout in silver. Now, we're talking about a 45-year cup and handle pattern. We're not all the way broken out yet, so it might take some time. And a lot of people are saying, oh, the little boy who cried wolf, that they're continue to say breakout, going to be a big move. And, some months go by and people start to lose interest. They'll say, it hasn't broken up. And then, AKA the little boy who cried wolf. So this is a response to it. It says, the bankers see this, whales see this. You'd be blind as a bat not to see this deep, ridiculously mature pattern. The only way to shake people off is with dirty, rotten propaganda about silver. So batten the hatch. The bull crap is coming. It will be rich. So what he's saying is they're going to try to knock you off through whatever measures they can. I think that there's a lot of fake news being released out in the markets. Maybe not in the markets, but out in the news. And some of it, I read some of these articles. I'm like, that is not right. When we had the first silver squeeze back in the day, there was an article that was released by JP Morgan saying that silver miners and silver was a really bad investment. And it came out the day after that silver jumped, that huge big squeeze. And I'm just sitting there like, how is this even legit? Like, they just released this the day after silver squeeze, almost like they were trying to punch that thing back down with everything they got. Get ready. If they are trying to hold this down, there's going to be a lot of resistance coming up here. Do I think they'll be successful? No. It's just going to take some time. And that's where everybody's going to say, oh, the little boy who cried wolf. Well, no, the pattern's still good. Everything's set up. But yeah, it's not going to be resistance free when we bust through some of these areas. 35 is a big resistance area. And I'm sure there's going to be a lot of resistance there. And the big boys are probably going to be sitting there with their silver and their silver deployment shorts ready. Also keep in mind, and I don't know how dire this is, but a lot of those banks are massively short silver. I'm not exactly sure what happens to those banks if silver were to go way up with those shorts. I don't know if it could bankrupt them. I don't know. Kind of interesting. Rick Rule says the truth is much worse. So this is Rand Paul. He says, in case you needed a reminder, our national debt is currently at more than $36 trillion. That's more than $323,000 per taxpayer. And Washington wants to add to that. And Rick Rule says the truth is much worse. Add in the net present value of unfunded entitlements, $100 trillion. All in, taxpayers are behind about $1 million per taxpayer. How does it feel? Are you good for your share? Guys, this is where the train, nothing stops this train. So are you good for $1 million per taxpayer? I mean, I wonder what the average taxpayer makes in a lifetime. I bet you it's not even $1 million. So I don't know. This is kind of, we're pushing it here, put it that way. And yeah, nothing stops this train at $1 million per taxpayer. Here's Sem. He says, historically, several late-stage empires have experienced decade-plus periods of secular inflation. The common themes across these cases are, 1, monetary distortion, often via currency debasement or excessive issuance without productivity growth. Number 2 is military overreach, empires straining to maintain or expand borders and influence. Number 3 is administrative decay, inability to collect taxes efficiently or manage spending. And number 4, declining trust in institutions, both monetary and political. These secular inflations typically signal imperial overstretch, the breakdown of old economic systems, and a transition period before reform or collapse. Does that sound like the system that we have today? Seems pretty, it sounds like we could fit in some of this. Monetary distortion, military overreach, administrative decay. I don't know if we have administrative decay. Declining trust in institutions. Yeah. Here's Silver Stacker. He says, which one would you rather have? 71.5 ounces of silver or 2 ounces of platinum? And there's the 24066, 24066. 1 ounce, so 2 1 ounce platinum bars, or we've got 71.5 ounces of silver. What would I rather have? I'd rather have the 2 platinum ounces myself. That's me. But I do think silver and platinum are both fantastic opportunities. Now here's an opportunity. Hansa says solar panels, especially new technologies like TOPCon and HJT, consume increasingly more silver, in some cases even twice as much as older models. So exponential growth in solar energy equals rapidly increasing demand for physical silver. And right here, it says, okay, we need a bigger bolt for silver. We're going to need some bigger charts, more solar installed in the last 2 years than in all history prior to that. On average, actual installations have been more than 3 times higher than their 5-year forecasts. And we're going vertical. That means more consumption of silver. Sam, this is with the US dollar. It says, thank you to At the Chart Report for the Chart of the Day nod. It's an honor to be featured alongside so many great technicians. Today's chart of the day was shared by at Sam Gatlin. It says, click here to read more. And this is the US dollar potentially rolling over and breaking to the downside. The reason I continue to share the US dollar index is because it has massive ramifications on how money is placed and put in the market. As the dollar, if this dollar breaks to the downside, which I think it will, and if other currencies outperform it, which if it's the dollar index, that's exactly what's happening, you're going to see money rotate out of US dollar denominated assets and go after stronger currencies. This is a part of the bull market of commodities. And when the dollar drops, that's generally when we start to see strength in commodities. Mineko64 says, Becent green lights, dollar devaluation is gold set to rocket towards $4,000 an ounce. Yeah, I agree. Porsche shifts course, leans into hybrids instead of EVs. Porsche planned to go almost all in on EVs. Customers had other ideas. It seems like the hybrids are winning out by a long shot across all the manufacturers. This is Porsche. I think Honda came out and said they're doing a bunch of hybrids. I think Ford nixed their EVs. Was it Ford or Chevy? Or both? I can't remember the article I was reading, but they're going away from EVs as well. So, what does that mean? Increased demand for platinum group metals. That's what it means. A good increase. Are we witnessing the start of a much-awaited commodities supercycle? Surely the silent depression can't last forever, and here we are going higher in the U.S. Commodity Price Index, 10-year rolling compounded annual growth rate, and he thinks that we could go all the way up there, and he's got a 2045 estimate, 2045, to get all the way to that peak. If that's the case, we've got a long way to go in commodities, another 20 years. Art Berman says the demand for oil, gas, and coal is going to be higher than all forecasts, says Anas. BRICS as a paper tiger. The dollar is here to stay. The petrodollar is here to stay. Trump hates the oil industry. And I just thought this was interesting. Oil, gas, and coal to be higher than all forecasts. If that's the case, then yeah, I think this is a good spot to be looking because they're very cheap and they've got really good chart patterns going on right now. Here's Sprott Physical Uranium Trust. It says, what a week for U.U as it breaks out of a descending channel, confirming bullish momentum with the strong continuation candle. This type of price action signals a shift in control from the bears to the bulls, especially after a prolonged downtrend within the channel. The breakout shows that buyers have stepped in with conviction, overpowering the pattern of lower highs and lower lows. This indicates renewed confidence, with market participants likely viewing the breakout as potential technical confirmation of trend reversal. So I agree. Here we are breaking out of this downtrend channel, and it looks pretty good. Hopefully we can get good upside momentum that gets generated, and we leave the $16.92 per pound area, or I should say per share, not per pound, but per share, and jettison out of here. TF Metals report says, I hope you're ready. So what are we ready for? The last thing anyone expects right now is June, July run to all-time highs in gold. Why? Because of the nonsense gaslighting of it's massively overbought and it's a crowded trade. And again, this looks like it's good to go higher, bouncing off this moving average. It looks like a 50-day moving average. Logan Majashami says, why do we just see the highest new home sales print in years? What? Wait a minute. Why did we just see the highest new home sales print in years? Well, it looks like we still have a good housing market going on here for new homes. That's good. That's good. That's what we want to see. U.S. EPA drafting plan to erase greenhouse gas limits on coal and gas-fired power plants. I'm sure that will increase demand, I'm sure. Willem Middlecoop says, it's official. It's all about creating demand for U.S. treasuries. So what do you mean? It's all about demand, creating demand. It's all about support for digital assets now to create the demand for U.S. treasuries. So it's all about Bitcoin, aka digital gold, the nucleus of digital assets. This will send Bitcoin much higher, probably reaching 1 million before 2030. And it says, Besant says, stablecoins could create 2 trillion of demand for U.S. treasuries, where we are going big on digital assets. Well, yeah, he needs to create demand for treasuries. That sounds great for him. So how about we go get some stablecoins to back Bitcoin, which really is just a scam to buy U.S. treasuries. I get it. Now I know why these guys want the money flows going into the intangible asset. They want money going in there so they can go create demand for their treasuries. Perfect. Baker Hughes rig count 523, and this is not looking good for energy service drilling companies. And there it is, what you've all been waiting for. Oil's down 8 rigs, gas is down 2 rigs. This is definitely not a drilling boom. This is the anti-drill baby drill. this is I guess, release of rigs. Jordan says the average cyclical bull move in gold reaches $5,000 in 14 months. This is the average of the 4 strongest cyclical moves. Current move has been running along the average to above it. Given the breakout from the 13-year cup and handle pattern, this cyclical move should be one of the strongest. Extended at the moment, so it could go sideways. So where are we at? So the average is the dot, and it looks like 2023 when we started here. That's where we're located in the middle there. So we're above most of the other bull markets, but pretty much on schedule for how we are advancing in this gold bull market. And he has, by 2027, a pretty strong up move, suggesting gold 5,000 or so. Hedge funds boosted their bullish position on Brent crude by the most since early April, as fading prospects for a quick U.S.-Iran nuclear deal raised expectations that the OPEC members' flows may be curtailed. Well, we'll see about that. Frank Giestra, he says, when only 3-4 members of Congress dare to speak out on the increasingly dangerous levels of deficits and debt, we're in real trouble. Nothing's about to stop this train. There we go. Nothing stops this train. As it heads towards a bridgeless cliff, a global monetary reset is in the cards sooner than we all expected. And that's in response to Rand Paul. High Heat says in the last 55 years, the oil to gold ratio touched 33 to 1 3 times. It hit 56 to 1 today. This will be the high. It's tough to call highs, especially the gold to oil ratio. But oil is undervalued for sure, 100%. Another silver chart by Grady. He says, the weekend is for stepping back and looking at the very big picture. Here is why silver is churning right here. It is trying to break out. The big breakout level using the yearly time frame is $31, $32. One of the most significant breakouts in history is in the making. This, again, is the mother of all very probable cup and handles. The bigger the base, the higher in space. And here we are trying to break out. So this looks fantastic. The measured target move of this setup is $250 an ounce. And that's all I've got for today, guys. That's what we've got. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. You can use that special coupon code. And that's all I've got for today. So we'll catch you next time. This is Finding Value.